Hi everyone, and welcome to our interest rate update for September 2015. I'm here with Rob Gilmour, as always. Tell us about the decision today, Rob.
Yeah, good afternoon, Aaron. Well, look, the Reserve Bank, not too many surprises today. They left rates on hold at their 2% level. And look, they're broadly comfortable with where things are sitting at the moment. They see Australia on a pretty moderate pace of growth. They're seeing unemployment being stable. And look, they're obviously closely watching events overseas. But from this point of view, it's difficult to see any changes to the rates for the rest of the year, I suspect.
Yeah, that's not too surprising, I suppose. There is a bit happening in the markets, though. There's quite a lot happening on my front. So, you know, investor loans are still getting difficult. They're getting more difficult from a credit point of view. The regulator's still clamping down. Rates are increasing. Rates are getting harder. Even fees are increasing at the moment. So there's a lot going on in the investor space. There's a lot of banks that are really worried about APRA's regulations. Some of them are just right on borderline in terms of what they're allowed to do. So there's a lot going on in that space, and I think that's probably where a lot of the movement or a lot of the changes are going to happen in the market over the next sort of 5 to 6 months. But you know, there's a lot going on, I suppose, in general there.
Look, absolutely, and look, if you take a bigger picture view, we've seen some massive moves in financial markets over the last month.
Yeah, what was happening there? I saw something going on.
Look, there's obviously a lot of concern at the moment with China and what's going on with Chinese growth and the transition of the Chinese economy. There's concern around the next move for the US Federal Reserve and what they're going to be doing with their interest rates, and that's having repercussions around the world. And so we've seen moves in US markets of 5%, you know, wow, at a time, you know, up and down. We've seen big moves in China, 5 to 10%, you know, at a time. And also recently we've seen oil up 10% and then up again 7% over the weekend. So you don't see massive moves in the markets like that and not see it last for a little bit of time.
Sure.
So look, it's really can be viewed as probably one as an opportunity. I mean, like taking a big picture view, US growth is strong, the global economy is still growing, so long-term investors with a little bit of cash on the side should see a little bit of an opportunity to buy value in markets, and that goes for the same in the Australian market as well.
Yeah, and is that just short-term volatility? Is that what it is? It's just time and place right now? How much of a lasting effect is that going to have?
Oh, look, I said it's going to last for a while. No one really knows exactly you know, what markets are going to do, but for a long time we've been saying US markets have been due for a correction, and now it bounced back straight away. So like I say, it's probably not the end of the story. The big thing will be to see what happens in US rates, and you know, taking a long-term view, if we do see a big correction in markets, then take that as an opportunity.
Yeah, of course. And look, lots going on in the property market still. Obviously, Sydney market's still running a bit hot. There hasn't been too much of a correction just yet, or at all. Things seem to be easing a little bit in my front, I suppose. I think these APRA regulations are starting to filter through a little bit on the investor side of things, but nothing too much has come out of the market. What are your thoughts on that side?
Look, I think when you're starting to see banks being a little bit tighter in terms of their lending, that's going to restrict credit growth, and it's hard not to see that have an impact on the property market eventually, and perhaps sort of take that heat out, which is really what's required in Sydney. So, you know, I suspect that we are in the beginning of a turning of that. Do I foresee any major corrections? Well, probably not, because the fundamentals are still the same, but you know, people just aren't going to be able to borrow as much money.
Yeah, of course. Well, look, that's our interest rate update for September 2015. We'll see you again next month.